Hi, I'm Grant Stephen.
And I'm Kris Bernier.
And we're the Two Investment Guys. This week, Kris and I are going to take a little bit different look at the markets. So rather than the numbers and the metrics and the various developments in the markets, we're going to talk a little bit more about the emotional cycle of investments and how to minimize the impact that that might have and some of the signals that you can recognize when emotion is beginning to take over the investment process. Now, it's interesting, Kris, that what we know is that in times of emotional stress, that the reasoning side of the brain actually starts to shut down or becomes more incapacitated. The research almost always concludes that emotion cannot and should not be paired with investment decisions. And that makes it tough for investors. So we want to talk about some of the issues that will allow you to recognize that what's happening in the investment process. And the first one, Kris, is the classic, the buy high and sell low.
Yeah, that's not what we would normally want to do, but that's what we often see happen when we look at fund flows. In the mutual fund industry, they track very closely the flow of funds in and out of mutual funds. And often what we see happen is during a period of a rising market, we see funds flow into the market late, and then we tend to see a top in the market. And as the market starts to sell off, investors often capitulate at or near the bottom. And often the market is even turning back up again and selling is still continuing. So it's often a cycle where your decision making is detrimental to your long-term portfolio returns.
Right, and that's really getting in your own way when it comes down to it, Kris. You have to understand that investing involves risk, which will inherently bring volatility into these types of investments. And then the second thing is, you do need to combine some of the investments in a portfolio. And that really leads us to the classic about diversify, Kris.
That's right, and it's something that we call asset allocation. So it's diversifying by asset class, that would be cash or cash-like investments, fixed income bonds, GICs, and equities. You can diversify by market capitalization, different size types of companies. Some perform better at certain periods than others. Diversify geographically so that you're not invested wholly in Canada, say, which represents only 4% of the world markets. Diversify in a lot of different ways, and by diversifying, that helps reduce the risk and the volatility overall in the portfolio.
Right. Kris, the last little piece of the puzzle is time in the market, not timing the market. And really what the research shows conclusively is that the largest rallies with the most intensity typically occur off the bottom. Remember what Kris was saying about the fund flows. That's when usually everybody's coming out, and that's when the big rally is. Those are the ones you need to be involved in. So how do you do this? Well, you pretty much have to stay invested. A lot of research shows that if you miss the 10 best trading days in any normal year, you'll end up with half the returns, and nobody knows which 10 days they have. So why don't we just talk really quickly about what to do here?
Sure. Well, I think first of all, investors need to keep their eye on the big picture. Don't get anchored on one specific piece of bad news. It's been really easy lately to get focused on Greece and what's going on in Europe. But there's other things that are going on that are positive in the market. And also to revisit the portfolio with your advisor. Make sure that what you own is appropriate for the time and that you've got proper diversification and the portfolio still fits within your overall risk strategy. I want to thank you again for your questions and comments. Please keep them coming. You can contact Grant and I at TwoInvestmentGuys.com.
Join us next time. Kris and I are going to turn back to the markets, and we'll bring you up to date on the latest developments there. So until then, I'm Grant.
And I'm Kris.
And we're the Two Investment Guys.